So, I'm sure you have seen traders, they trade with a naked price chart, and you wonder to yourself, right, how do they do it, right, without indicators, without any tools, but just, plain old naked price chart? What is the secret? Okay, so in today's video, I will share with you, right, what are the price action trading secrets that you must know, right, so you can also trade with a naked price chart to better time your entries and exits without relying on any form of indicator. So first thing first, right, if you are new to this video, to my YouTube channel, right, hit the thumbs up button and subscribe to my YouTube channel, right? The button is below, just click subscribe. So this way you will never, right, miss another training video from me again. Have you done it? Then let's get started. So first thing that I want to say is that when you're trading price action, right, you need a framework. Okay, what is a framework? So let me give you an example. So let's say you want to build a house. Okay, let's say you have a piece of land. Maybe it's 3,000 square feet. A piece of land, that's given to you, and you want to build a house, right, to house your family. How would you go about it? I'm pretty sure that you just won't go into that piece of land, put in one toilet bowl over here, let me do the ceilings over here, let me plant my garden over here, and maybe let me put my bed at this location. You wouldn't just randomly put all this stuff on that piece of land, won't you? What you'll do is that you will probably hire someone to plan it for you, to have a blueprint in your hands that says, hey, this is the house, this is where the house will be, this is where the toilet will be, this is where your garden will be, this is how many levels the house will likely have, this is where your bedroom will be, right? You would have a blueprint in your hands to kind of map out, right, where the things should be at. So only then, right, when you follow that blueprint, that framework, would you have a house that actually makes sense. Are you with me? So this is the same for trading. This is the same for price action trading, right? You need to have a blueprint, a frame of reference that you can compare against, and then, right, to form an educated trading decision. So what is this framework or blueprint that I'm talking about? Okay, so this is where I want to share with you something called the 4 stages of the market. All right, I didn't invent it, right? It's possibly, mentioned by traders before my time, right? Traders like Stan Winston, Richard Wyckoff, and those more veteran traders. Right? This is a concept that I learned from them. And if you have already heard of it or learned of it before, right, I still encourage you to watch it because I'm going to, tackle it, right, from a different light that you might not have, understand it before. So first thing first, right, let me share with you the framework for a price action trader. So as I've mentioned, 4 stages of the market. So the first stage of the market is what I usually call an accumulation stage. It looks somewhat like a range, right? And prior to this range, the market is actually in a downtrend, right? I don't have any space, so let me do this, right? Downtrend. Market goes in a range. Market breaks out of the range, goes into a advancing stage. And the market doesn't go up forever, right? Traders will take profit, short sellers will come in, right? And the market then, slowly goes into an equilibrium like this. Then after the market is in an equilibrium, right, eventually, the market could reverse lower. This is where the sellers take control and push the price down lower. And right, the market doesn't go down forever, right? Eventually, you find a level of equilibrium before the buyers take control and push the price back up higher once again. So it goes into an equilibrium and then breaks up higher. So you can see that this is the cycle that the market typically goes through, right? A period of accumulation, then it breaks out into an uptrend, then it goes into a distribution stage, right, where the market goes into a range in an uptrend, then it breaks down, forming what we call a declining stage, and then the cycle repeat all over again. So now at this point, right, I know some of you might be thinking, hey, Rainer, all this, it looks simple on hindsight, right? For example, this is a distribution stage, but who is to say, right, that the market can't break out higher? And I do agree. The market can break out higher. But what you have in front of you is a frame of reference, something that you can measure against. Okay? So let me give you a few examples, right, of how I'm going to use this framework, right, to plan my trading decisions with the 0 indicators, just this simple framework. Okay? Let me explain. So we'll starting off with simple examples, and then we will move into progressively a little bit more complex ones. So if you look at this chart, daily time frame of Palladium, if you look at it, let me ask you, what is this stage of the market? Chances are you'll say it's in an uptrend, right? An advancing stage. So if you can classify this as an advancing stage, what is the one thing that you don't want to do? What is the one thing that you shouldn't be doing? You shouldn't be shorting this market. This means that you won't think of selling in this market. You won't think of shorting. You will only, right, find buying opportunities whenever you see a chart like this. And where could you buy on this chart? If you ask me, right, a few areas that you can look for is, let's say, number one, right, plain old vanilla support resistance. Okay, don't need any indicators and whatsoever, right? Just draw off your support resistance. If you do not know how to draw, I have an earlier video that I've done on it. Go and watch that video on how you can draw support resistance. So I see one over here. Okay, see one possibly here, maybe slightly lower here. One about here, and another one here. So I'm just gonna, I'm not gonna fine tune these levels. These are just the levels that I see, straight off from here. So what you can see that, okay, I know that this market is in a advancing stage. So if the market comes down lower, right, retesting this previous resistance that could act as support, right, and it gives me a bullish reversal pattern, right, like maybe say a hammer engulfing pattern, I know that this is a possible level that I can look to buy since I'm in an uptrend, since this is in an advancing stage, right? Can you see what I'm trying to bring across, right? Classify the stage the market is in, and then plan your trading decisions, right, by using, support resistance, trend lines, right, if you even want to. Okay, we can just draw trend lines again, right? For example, if I were to draw a trend line, I would draw it, let's say, somewhere here, like this, right, connecting the points, right? If the market retests back to this trend line, I know it has the confluence of this area of support as well, okay? And if you want to use indicators, that is fine as well. Indicators, they are not bad, right? Indicators are only, I would say, bad if you use them solely to make your to rely on them for entries and exits. If you just, trade them in isolation without taking into consideration the context of the market. But now that you understand the context of the market, it's in an uptrend, you can even use, for example, the 50 period moving average. This one here is 26. I'm just going to change number to 50. You can see that the market is respecting the 50 MA, right? Pretty nicely. Over here it broke down, right? But previously, right, you have quite a number of touches on the 50, 50, and 50 over here. So these are all possible trading opportunities for you to get long in this advancing stage. Okay, so this is an example of how I use the framework, the advancing stage, right, to plan my trading decisions. Let's move on now to another example. So let's see what else. We can, talk about something. How about Bitcoin, right? Recently we have a massive collapse, so that should be interesting. Bitcoin futures. Okay, let me just get a better chart. Bitcoin, I think we can look at cryptocurrency. Over here, right? So now, when you look at this chart, let me ask you, based on the 4 stages of the market you have learned earlier, what stage is Bitcoin in right now? 3 seconds. 1, 2, 3. I hope you've said, right, declining stage, right, which is in other words for a downtrend. Why is that? Because it's quite obvious. You can see that, a series of lower highs, and right now we just made this lower low over here. Okay, so in a downtrend, what is the one thing that you don't want to be doing? You don't want to be buying in a downtrend unless you're an investor or Warren Buffett, right? But if you're not an investor, if you're a trader, you don't want to be buying in a downtrend. What do you want to do instead? Well, you want to be shorting, right? You want to be selling, right? Okay, so now, you know what you should be doing. You should be shorting this market, Bitcoin, right now. The next question is, where do you want to short? So again, this is where, just, simple technical analysis could come into play. Again, you can use trend line, support, resistance. I'm just going to draw a few obvious levels that I see over here, right? Let's go with the trend line. Okay, trend line here. Then I will draw support resistance over here. Okay, so you can see that right now, the market clearly has broke down. So what I'll do is that if, I'm trading Bitcoin and if I want to short it, right, I will wait for the price to possibly retrace back towards this area of value, right? Previous support that could act as resistance, and then look for shorting opportunities down here. Of course, this is not the only way to trade, right? But what I just want to share with you is a potential scenarios, right, that could form in your head to formulate your trading strategy or trading plan or trading decision, right? So this is how I would trade Bitcoin. Alternatively, right, what could also happen is that Bitcoin, it forms somewhat like a flag pattern, right? The market starts to pull back, right? Consolidate, okay? At this point, right, hey, market is forming a tight consolidation, right? And since this is still in a declining stage, right, this could possibly be a bear flag pattern, and if the market breaks below this swing low, I could still go short, right, and have my stop loss just above this swing high over here, right, just a buffer above that swing high. So you can see that, once you have classified the stage of the market that it's in, right, then you can formulate, right, proper trading decisions, right, that is according to the price action of the markets. Okay, so what I've just shared with you are two simple examples. Let me go into something a little bit more complex, right, from here onwards. So this is where we start to, analyze, right, what if scenario where, the scenario might not be too obvious, right? So let's do a more relatively easy one before we go into something a little bit more complex. So if you look at this, right, this is the chart of soybean, right? If you look at this, right, what stage of the market is this in? Okay, so this is where things get a little tricky because it might be an accumulation stage. It might also be in a declining stage. Okay, so what stage of the market is this in? So for me, I would classify it as a accumulation stage. Okay, what I like to see is that if you're not sure, right, usually in an accumulation stage where the market goes into a range, right, the 200 MA, right, will start to flatten out and eventually, right, move into within this accumulation stage area. It means that the price will start to chop up and down above the 200 MA. So this has not happened yet, but it could possibly happen, right? If we give it another few more weeks, right, you can see that this 200 MA will continue to head down lower, and eventually, if the price still, let's say, is contained within this range, if the price still contains within this range, what you expect, right, is the 200 MA start to float lower, right, and you notice that the price starts to whip it up and down. So this is a signal to you that this market is potentially in an accumulation stage. So if you know that this is possibly an accumulation stage, right, because you also have this prior downtrend that occurred, right, what is your decision that you want to make? What is the framework, the reference, right, that you've seen earlier, right? You can be buying, right, because you know that if the price breaks above the accumulation stage, right, the market could possibly move into an uptrend. Okay, so where do you buy in such a market condition, right? Few ways. Number one, you can look to buy on the retest of this area of support, right? If the market comes into this area of support, and if there's a false break setup where the market comes lower, act as though it has broke below support and suddenly, boom, right, reverse higher and close back into the range. That is a false break setup. Traders who shot the breakdown, right, got caught, right, by the false breakout. So this is where you, right, trader who is long, right, can take advantage of this price pattern. Okay, so that is one scenario, a false break setup where the market comes lower and then suddenly reverse higher. You can go long on the next candle and have your stops just a distance below this swing low. I don't go into precise entries and exits because that is outside the scope of today's video, right? Today's video is just really training you to read the price action of the market. So that's one possibility. Another possibility is, again, right, if, as I've mentioned, right, the market is in this potential accumulation stage, price 200 MA comes in lower, the market forms a build up. What you can do is look to buy the breakout of resistance and then just have your stop loss, right? For example, just a distance below this swing low over here, maybe somewhere here. So if the market breaks out, right, you can look to get on board, right, the start of this new trend. So this is another technique that you can use, right, to trade, right, if the market breaks out of this accumulation stage. And finally, right, another thing that you can do is that let the market show its hand, right? Meaning that you don't what do you call it? You trade what you see, right? You don't anticipate what the market will do. You don't try and predict what it will do. So what you can do is, again, market, let's say in this potential accumulation stage, let the market break out and then wait for the pullback to form, right? It could be like a bull flag pattern. like this, right? And if it breaks out above this highs, you can go long, right? And then just reference this low as your stop loss, right? Just put it a distance below it. That's another way you can do. Or alternatively, another variation of it is that you can wait for the market to break out and then do a retest, something like the Bitcoin example that you've seen earlier. Okay, but again, right, the point that I want to nail home is that you must have a frame of reference, as what I've been sharing with you all along, right? Without this frame of reference, there's no way, right, you can actually, make a trading decision, because you look at this chart, stare blank and what's going on? You have no idea, right? You need this frame of reference, right? Otherwise known as the 4 stages of the market. All right, so let's move into something now a little bit more complex, shall we? Right, let's look at the S&P. So now when you look at this S&P 500 over here, right, it's actually somewhat similar to the soybean. Okay, you can see that this market previously has been in a uptrend, right? Advancing stage. Notice the series of, higher highs and higher lows. But right now, what's possibly happening is that this market is going to a range. Okay, and if we pull out that 200 MA tool that I just, mentioned to you, right, to let the price chop up and down, right? Notice that this is happening on the S&P 500. Now, I won't say, confirm that this market is in a distribution stage, because really what could just as happen is that the market simply just breaks above this highs and continue the uptrend. That is possible, right? We are all dealing with a probabilities here whenever we are trading, not certainty. So that is one possible scenario. Okay. However, you also know that if this is a distribution stage, a potential distribution stage, right, then hey, you could also look for shorting opportunities towards the downside. Now the question is where? Where do you want to short? Okay, so again, frame of reference, this is the resistance and area of support. So let me just draw the levels, right, so I don't have to keep redoing this. So this will be the level I'll draw, and over here. Okay, so this is the support resistance that I would draw. So again, if you are bearish and you think that, hey, this market is toppish already, right, given the fundamentals and economy, blah, 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 you believe that this market could possibly head down lower, look for shorting opportunities, right? First thing, again, number one, price comes into support. It forms a build up. And then it breaks down, right? If that happens, again, you can reference this one over here, this high, right, as your stop loss, right, in anticipation of a decline in this market. Number two, right, a pretty straightforward false break setup, right? The market comes up higher and get rejected strongly down lower, right? If that happens, again, you can just, look to short on the false break, right? So you can see that the false break somewhat gives you a confirmation that the market isn't going to hit higher anytime soon, right? So this is why the price got rejected and it closed back within the range. However, if this price pattern didn't occur, the market just breaks out and then continue higher, hey, right, you didn't lose anything, because you didn't short just because price is at resistance. You were waiting for a specific price pattern, right, before you went short. And if that didn't happen, all right, you've got nothing to lose. And alternatively, right, if you want to short, again, you can wait for the breakdown and then the pullback, right? Similar as to what we've seen earlier on Bitcoin. Okay, so this again, right, the frame of reference, right, a potential distribution stage. Now let's look at, a couple of more charts, right, before we conclude today's session. So I do agree that sometimes you might not be able to classify what stage of the market is in, right? Let me just, share. Sometimes it may not be obvious, unlike what I just shared with you earlier. So if you see over this, right, this one over here, this is the chart of euro against the pound. Okay, if I just zoom out a little, this market, depending how you look at it, this could be in a range, but you have no idea whether it's a distribution stage or an accumulation stage. If you just zoom back far enough, hey, yeah, this might be a distribution stage, this whole area over here. That might be the case. Okay, but it might also be, okay, an advancing stage if you look from this this decline over here and then market consolidate. So you can see that there are subjectivity to it, right? Sometimes when you look at a chart, it might not make sense at all. Okay, so what do? Well, you have a few options. Just trade off the levels that you see on your chart. In this case, right, the levels are this, resistance and support. If you don't want to, right, just move on and find a more obvious candidate, a more obvious trading setup, right? So I want to be honest with you over here, right? there are often times, many times where the chart won't make sense. For example, if I just look at pound Aussie, let me just look at palladium. Alright, you can see that right now palladium seems to be still in an advancing stage. Okay, let's look at platinum. This one more of a declining stage. Dollar yen, right? You can see that dollar yen, this one is a chart that pretty much don't make sense. I can't classify anything based on what I'm seeing over here for dollar yen. Okay, so this is really the honest truth. So now I want to share with you one final example, right? And this one is powerful because it gives you an insight, right, to whether it's likely to be an accumulation stage or a distribution stage. And how we're going to do it is through the use of multiple time frames, right? So let me explain. So let's one final example. So if you look at this, right, this is the chart of New Zealand Swiss franc, right? Let me just plot out, basic support resistance level here first. Right, I see one over here. Okay. And perhaps over here as well, right? Just leave it as this, right? This is all we need for now. So if you look at one thing to share is that the 4 stages of the market, it appears on different time frame, right? The 5 minutes, daily, weekly, even, right? Just that the only difference is that the magnitude of the move is different. The higher time frame move, naturally it lasts longer. Okay, so if you look at the 4-hour time frame, this market, you can see that right now, it's actually coming into what we call a head and shoulders pattern, a potential distribution stage, right? We have this prior uptrend, then the market now goes into a range within this uptrend. So this is what we call a distribution stage. Now, how do you know that this could possibly be a distribution stage? Remember the clue I said earlier? Multiple time frames. If you look at the daily time frame, which is this time frame over here, you'll notice, right, that this market is actually coming into an important price structure on the daily time frame. So, this is an area of resistance. And now, on the 4-hour time frame, right, you see that this market is forming somewhat of a topish pattern, right, like a head and shoulders pattern, right? So this tells you that, if the market were to consolidate and break down, this has a pretty high probability, right, of the market actually, heading down lower and then moving into a declining stage. Okay, so this is how you can actually use multiple time frame, right, to kind of give you a clue to whether the market is moving into an distribution stage or accumulation stage. Let me just give you one more example because I think this is a little bit complex and some of you might miss what I'm trying to say, right? So just give you one more example. Let's look at Euro New Zealand. Okay, let's look at a daily time frame, Euro New Zealand. Notice that Euro New Zealand daily time frame price coming into this area of support. Okay, if you look at a 4-hour time frame, again, you would see a declining stage over here, right? This declining stage is actually the down move that you saw on the daily time frame, which is actually this move over here. All right. So on the 4-hour time frame, what you're looking for is again, right, a potential accumulation stage where the market goes into an accumulation. All right. And if it does break out, right, you know that this could be a legitimate accumulation stage because, right, it's leaning against this higher time frame structure, this higher time frame support. So all the more that you have a confluence, right, or rather another factor that supports your view that this market could potentially break out of this accumulation stage. Okay, can you see how powerful this is, right? On how you can actually predict, right, whether the accumulation stage, whether it will hold or whether it's just another continuation, right, within this downtrend. So this is a very powerful technique using multiple time frame analysis. Okay, I know I've covered a lot, right, in today's video, so let's do a super quick recap. Number one, right, an accumulation stage is where the market is in a range in a downtrend, right? That's what you've just seen a few seconds ago. Number two, in an advancing stage, right, the price is in an uptrend. In this case, right, you want to be looking for buying opportunities, right? Don't look to short the markets. Stay long only. In a distribution stage, right, the market goes in a range in an uptrend. It can be difficult to tell whether the range will break out higher or lower. So this is where you can read the price action of the markets or let the market, right, give you clues, right? If he breaks the area of support, right, then hey, you would shift your bias from bullish to bearish. So for example, right, I know that in a distribution stage like this, right, it can be tricky to tell whether would this be a continuation up higher or a breakdown lower. So what you can do is let the market show you give you clues, right? If the market breaks below this area of support, and then you shift your bias from bullish to bearish. Or when you've seen earlier, right, there is a multiple time frame confluence where the higher time or where this market price action comes into the higher time frame resistance. For example, this is a higher time frame resistance. This price action leans against this higher time frame resistance. That increase the odds, right, that this would be a distribution stage. Then finally, we talk about declining stage, a downtrend, right? Basically, you want to be shorting in this market condition and not look to buy. And the final concept that we talk about is multiple time frame analysis, how you can actually use multiple time frames to, increase the odds of your trade working out. For example, in the in the accumulation stage and the distribution stage. So we have covered a lot in today's video. It's jam-packed, right? So if you're a little bit lost, you need more, revision, look through this video again, right? And also go down to my website, tradingwithrainer.com over here, right? The link is just above here. Scroll down, right? And I want you to download this book over here, The Ultimate Guide to Price Action Trading, right? Click this orange button, right? And I'll send it to your email address for free, right? This would complement what you have learned today, right? With regards to price action trading, how to better time your entries, exits, and we'll talk about, candlestick patterns as well. Something that I've not touched on in this video, because this video is meant to be a high level framework. So you know what's going on and what people see whenever they're trading a naked price chart. Okay, and that's it, right? And if you've enjoyed this video, do me one thing, right? Hit the thumbs up button. Well, it's a few things. Hit the thumbs up button and subscribe to my YouTube channel so you don't miss a video from me. And any feedback, comment, let me know below and I'll get back to you. So with that said, I wish you good luck and good trading. I'll talk to you soon.